Hey, good morning. Let's go over today's trade plan. So in the overnight session, the sell side has been a bit more dominant, but the buyers have been defending the 62 half to 64 half zone, and we know that overall the buyers are still in control, and this is still a fairly bullish market. So off the open, we're going to keep an eye on the 62 half to 64 half pre-market support, which is still technically a more aggressive area of support. And if the market's holding above it, then it serves as a confirmation that the buyers are still quite aggressive in the market. If we get a break below 62 half, we can test 56 to 58. We have an open gap down there, and that's still an area where buyers can be active. Same goes with 52 to 54, which is the ideal trade location on the day time frame. So if 56 to 58 doesn't hold, 52 to 54 can still attract responsive buyers. So unless we're seeing just major weakness on the day time frame, we are going to be relying on the larger bullish pattern that's in play right now and expect the buyers to defend pretty much every support zone on the way down. And ideally, even if you get a move lower, you want to see the market holding above 52 to 54, but the larger support that really needs to hold, bigger picture, is the 44 to 46 half. But given how strong the recent breakout has been, it's very unlikely that we're going to get a move all the way back down into 44 to 46.50. So most likely, even if we had lower, 52 to 54 has pretty good chances to hold. And even if the zone gets taken out by a point or two, it's not really going to make a difference as long as we're not breaking down on broad market weakness and just sustained downside momentum. The bigger bullish pattern can still come back into play and buyers can step in at initial support 56.58, and if the market is really strong, then we could even hold 62 half to 64 half. We'll just have to gauge that off the open. On the upside, the primary resistance is 70.75 to 72.75. Remember, that was the larger time frame resistance that we were trading against yesterday. At this point, that resistance has been tested multiple times, and the more times you hammer away at a resistance zone, the more likely it is to finally crack, and then the market can go through. So we've already seen a response off that zone yesterday, and at this point, if we head back up to it, although we can still technically hold at the zone, but like I said, the more times you test a zone, the more likely it is to break. So now we have to be cautious shorting 70.75 to 72.75 because if we head back up there and the advanced decline line is trending higher and we have some pretty decent upside momentum, then we could see a breakout above initial resistance for a test of 76 to 78, 79, 75 to 80 quarter, and possibly even the 82.75 to 85 area, which marks the all-time high. Remember, NQ has already made new highs over the last couple of days here, so we could just be seeing a delayed response in the S&P. And bigger picture, S&P could be heading back up towards its own all-time high at 82.75 to 85. So our focus is going to be more on the long side because that's the bigger pattern that's in play right now, and we are going to be more conservative on the short side now, especially if we're not getting good trade location. So for example, let's say we get a breakdown below 62 half, 64 half, that's still going to be a risky breakdown to short simply because buyers can step in at pretty much any zone. So in order to take a short trade, now we're going to have to see excess weakness on the day time frame or just many signs supporting the short idea. Whereas on the long side, we can simply rely on good trade location and the overall bullish bias that's active in the market right now and just take the trade even if it goes against some short-term intraday weakness in real time. So the focus is going to be more on the long side. We're going to have to be conservative on the short side, and the way this market is setting up right now, especially if we're holding above 62 half, 64 half, then we could be looking at a breakout above initial resistance for a move up into possibly even towards the all-time high. Although, today being Friday, heading into the weekend, we could get a little bit of profit taking as we head higher. So we do have to be mindful of that and just make sure that at least on the smaller time frames, we are getting somewhat good trade location even on long setups. So that is how the markets are set up right now. Let's keep an eye on the pre-market support zone, 62.50 to 64.50 off the open, and we'll take it from there.